Just let me know I'm having technical difficulties.
Hello, everybody. Thank you for joining this fantastic seminar today. We got a couple of things that we want to share with you today, and it's very important that you understand that some of the things that you hear today is going to be some stuff that you've may have heard before, but hopefully we can say it in a way that you can understand it. I am joining today with Jamie Kinney. She is a premier realtor in the Virginia Beach area. We are having some difficulties, but we still gonna move along. The show must go on. Jamie, are you there? Can you introduce yourself?
Yes, I'm here, and I do believe that it's working now. I can see your screen.
All
It
righty.
popped up on me. So that's good. So, hello, my name is Jamie Kinney. I'm a real estate agent with Keller Williams Town Center in Virginia Beach. And today I'm going to present to you how a loan officer such as Reggie supports a strong VA offer and how to make a VA offer competitive. Just to let you all know, I will be reading from my notes that I've prepared for you today. That's just to make sure that I'm giving great, accurate information. So be ready to take notes.
All right. Thank you so much, Jamie. She is dedicated and diligent about making sure that you get the correct information. Here are some bullet points of what we will discuss today. I'm gonna jump in, I'm gonna jump out, I'm gonna say certain things, but I want to make sure when you walk away today, I want to make sure that you understand or feel better or know a little something more about purchasing a home with a VA loan. Now, my job is not to make you a mortgage broker today, and Jamie's job is not to make you a realtor, but give you enough information to say, I deserve a home. I need a home. I have the benefits to get a home. So we'll talk about a couple of things: VA loans, loan options, mortgages process, how to make a strong offer. Jamie will talk with you about that, and we'll talk about the market. Understanding the VA loan basics and eligibility. There are three bullet points that I really want to share with you. And it's the 0% down payment, no monthly PMI, and lower interest rates. So let's talk about the 0% down payment. Yes, you are in the military. You're a veteran or you're active duty, and you have the opportunity to purchase a home without putting any money down. However, there's a however. There are two components when purchasing a home. You have the down payment and you have closing costs. So closing costs is exactly what it says. The cost it takes to make sure that the loan is closed, make sure that you're paying the insurance and the taxes for the city that you're in, and all of the people who are involved with the loan. That's called closing costs. Down payment is what you put down to show good faith that you want this house. But let me show you something about a down payment that most people it's a misnomer. Now, you can put money down if you want to. You don't have to in a VA, that's the benefit of it. But let's say you decide to put 3% down, 5%, 10%, or whatever you want to. That's good if you have it. You're not giving that money away. Most people think you're throwing the money away. No, you're not. So let's say you buy a home for $300,000, and you put 5% down. 5% of $300,000 is $15,000. So you have $15,000 of your money put into your home as equity. That's what that is. So you're not just giving it away. Your purchase price now is 285,000 because you've made it whole with 15,000. So $15,000 of your money is put into the house. So if you decide to sell that house a month later, 2 months later, you sell it for 300,000, you get your $15,000 back. But that's if you decide to put money down. Again, as the VA loan, you can go 100% finance, don't have to worry about that. Now, you have something that's called no monthly PMI. The VA has something called a upfront funding fee, and this is money that you pay up front. It's all included in the loan, so it's not additional money that comes out of your pocket to help the government to be able to give you 0% down payment on loans. Now, if you have a service-connected disability, they waive that funding fee. So you don't have to worry about that. If you're a veteran, you got a service-connected disability, they will waive that fee. But just to give you a breakdown of what the benefit of not having PMI. PMI is an insurance that you pay. You pay the bank. You make the monthly payments on the insurance policy in case you default on the loan. Part of that loan is covered by the insurance you pay to protect the bank. You don't have to worry about that with the VA loan. Low interest rates. Now, some of you all probably get off the call when I say this one here. Low interest rates, we all want a low interest rate. It's a given. You want a low interest rate. But I do not spend a lot of time on interest rates because if you're currently renting, you're paying 100% interest rate to the landlord. That's what you're doing. Rates right now are anywhere from the sixes and the fives, but even if you paid a 25% interest rate, it's better than renting. And that's why I don't want the driving factor for you to be an interest rate. Interest rates are great, and we want the lowest one that we can get. And what I mean by they are great, you get to write the interest off at the end of the year when you purchase a home. When you're renting a home, you don't get to write the interest off. You don't write the interest off on your credit cards at the end of the year. You don't write the interest off on your car payment at the end of the year. So that's what I mean when I say interest rates are great because you get to write the interest off at the end of the year. You still want a low interest rate, but you do have that flexibility to write that off at the end of the year. There are many different ways that you can qualify for a VA loan. First of all, if you're active duty, and many active duty of our military people do not know that they can purchase a loan while they're active duty. I was active duty Air Force. I spent 4 years in the military. I'm in the Air Force. I had no idea that I could purchase a home when I was in the Air Force through my VA benefits. I had no idea. Matter of fact, the first home I bought, I didn't even use my VA loan. Out of sight, out of mind, forgot about it. I probably used my VA loan 15 years after I got out of the military, maybe longer than that. So that is something I want you to grasp, hold on, and take advantage of it. So if you're active duty for 90 days and something happened, you get discharged, you still can use your eligibility, your VA entitlements, that's what they call it, to purchase a home. A veteran, if you've been a veteran, you have to spend 90 days or up to 24 months, depending on which era you were in the military, and you have access to use those benefits as well. Now, the Guard and Reserve, this is a little different. It's a little longer, but there's a caveat. If you spent 90 days active duty in the reserve or the military or the reserve or the Guard, you have the opportunity to access those VA benefits entitlements to purchase a home. If you spent 6 years in the Guard or the reserve, you have the same benefits that everyone else has. So you don't have to worry about, oh, I spent 7 years or 8 years, do I get those benefits? 6 years, fine. If you got deployed for 90 days or more, absolutely, you can get those benefits. Now, before I go on to the surviving spouse, I always like to talk about the importance of having a realtor involved in knowing what's going on. As I share with you, Jamie is in the Tidewater area and pretty much everywhere. There are military everywhere in that area. So she's very familiar with just the military lingo, the military people, the military talk, the way we move, all of that. That's outside of finding you a house. So you do want people to know how to relate to you and understand what's going on and know what the LES is and PCS and TDY and all of that. Those are some added benefits of knowing having a good realtor. Now, let me get back to this last bullet point, surviving spouses. So a surviving spouse, so if something happens to you, your spouse, under certain conditions, can use your benefits and carry the legacy on and purchase a home. That is one of the most under talked about benefit of the VA loan. Under talked about, and I really think people need to talk about it more. Now, if you're in the military active, you have to present something called a statement of service to us. And that just shows that you're in the military. If you're a veteran, all we need is your DD 214, and then I can pull your certificate of eligibility. So a statement of service if you're active, DD 214 if you're a veteran, and I will pull your certificate of eligibility. VA loan, options for every stage of your journey. There are different parts of the loan. Again, I'm not trying to make you a loan officer, so I will make sure that I don't use too much jargon. But one of the underutilized portions of this loan where you can have this loan make money for you is the standard purchase. You can purchase from one unit, which is mean a single family home, up to four units, which is multi-family. Let me give you an example of how you can make this make money for you. You have to just really think about this and understand and take advantage of the opportunity and the benefits you have. Let's say you're stationed in, let's say you're in the Air Force, and you're at Langley Air Force Base, and you want to purchase a quad, four units. You can and you can go out and purchase that with your VA loan. And let's say the mortgage payment on that quad, I'm just using round numbers, so I'm doing math on the fly. Let's say it's $2,000 a month to pay the mortgage company for that quad. Well, guess what? You live in apartment A. You have someone in apartment B, apartment C, and apartment D. You're charging them $2,000, $1,000 a month. Let's say you just charge them $1,000 a month. So everybody's paying $1,000. You're paying $1,000, and the other three tenants are paying $1,000. Total of $4,000. So your $1,000. Let's say you don't spend it, you put it in the bank. Apartments B and C pay you $2,000. That pays for the mortgage. Your mortgage is paid. Everything you get from apartment D is profit. Remember, you saved your $1,000, so you've made a $2,000 profit off of a four-unit building, and you're basically living free. They're paying your mortgage. You get the write-offs at the end of the year. Remember, I told you about those interest rates? You get the tax write-off. They don't. They're putting equity into your home because homes generally appreciate 3 to 5% each year. So now your building is appreciating. Then every dollar, so part of that mortgage payment is principal and part is interest. So part of that principal is going to pay your debt down. So now each month they are going to pay the debt down on that property. So that's more money put into your pocket. That is a very, very good way to make money using your VA loan. Now, you don't have to get a quad. You can get a triplex. You can get a duplex. You may say, I don't even want to be bothered with that. Just give me my single family home. Well, that's fine too. You get your single family home. They PCSU, and I'm going to use Air Force because I was in the Air Force. They send you to Davis Mountain Air Force Base in Tucson, Arizona. So you go up there and you decide, I want to keep that house that I bought in Hampton that when I was at Langley. So I'm going to keep that house, and you can rent that one out and then buy you another one while you're in Tucson. Or you can sell that one, put the money in your pocket, put it in the bank, reinvest it, or put a down payment on your new home. Those are the benefits that I really wish we could take more advantage of. The next one is called energy efficient mortgages. This allows you up to 5%. You buy a $300,000 house, 5 times 300,000, 15,000 to make your home more energy efficient. Put better windows in, put insulation in, anything to make your home more more beneficial for as saving energy. Beautiful. PCS moves, I just talked about that. You're at Langley, they send you over to uh, Tucson, Arizona. You're at Davis Monthan Air Force Base. You say, hey, I love the living off the base. I love owning my own home. Let me buy a home there. We can put you in a home there as well. You can rent the home out that you had in Langley, or you can sell it. Beautiful, beautiful, beautiful benefits. When you decide, hopefully you'll make some decisions within a few days of what you want to do. Let me be clear when I say what you want to do. In no reason out, in no circumstance, I'm trying to put pressure on you, but I do think you should start the process, even if you're not going to buy a house for two years. The reason I say that, human nature, most of us, maybe not you, but many people wait to the last minute. I want to move in 2 months or 30 days, and they never looked at their credit report. They don't know how much money they need to have to put down or to closing costs. Buying a home is a step-by-step process. Some people come in ready, some people have already prepared, some people don't know where to start. This is why I want you to take advantage of what's going on now. Write down whatever you need to write down from this presentation. And at the very end, if you say, I want to purchase a home, write down a date that you want to move. It could be 2 years from now. Get with Jamie or myself, and we can start the preparation so you can understand how and the needs of what you need to purchase a home. Now, let's talk about the steps. There are several different steps when it comes to the process of purchasing a home. The very first step is a pre-approval, but before the pre-approval, you'll have a consultation with me. Many people tend to go to the realtor first, but it's best that you come to the mortgage person first so they can give you a pre-approval that you take to the realtor. Now, if you see a home that you like, absolutely, you call Jamie and say, hey, I like this home, and she may give you some information on it. But the next step is that you have to reach out to me, a loan officer, and get pre-approved. Let's go over that pre-approval process. First of all, there are three approvals. You have a pre-approval. That's when you come to me and you say, hey, I want to purchase a home. I'm looking to purchase a home. So I'm going to ask you three things. I'm going to ask you about your income, your assets, and credit. That's all I need, those three things. And I'm going to tell you, I need you to tell me everything. I'm your preacher, I'm your lawyer, and I'm your wedding planner. When I tell you I'm your priest, I need you to tell me everything. One of the main things that hold up loans, people are withholding information from the loan officer, and they're gonna find out. And once it's found out, we got to go back and backtrack and figure this out and do this and try to get the loan through. So that's why I'm your priest. You need to tell me everything. Second thing is, I'm your lawyer. I'm not going to jail. So we're going to do everything. There's a lot of fraud that goes on in this industry. And my job is to make sure that anything that doesn't look right and anything that's going to potentially harm you or myself, we're going to address it up front. That's why it's so important to tell me everything. Wedding planner. When you had that beautiful day, all you want to do is go in there with your bride or the groom or whatever and have that wedding, and it's done. You don't want to think about the flower girl. You don't want to think about the caterer. You don't want to think about nothing but getting married, having a good time, and going to the honeymoon. Those are my three steps to get you there. Now, that's the pre-approval. Once you fill out the application, you send me documentation. I look at it. Your credit score is this. You got this amount of money in the bank. You make this amount of money. I can approve you for this amount of house. So let's say you only got two of the three. Well, we'll work on the other. Let's say you don't have the money for closing costs. Well, we'll figure out a way to work on that. Let's say you don't have the credit score. We'll figure out a way to get the credit score where we need to. I'm a broker. And a broker means I have 100 lenders at my access. All lenders don't do the same thing. So if it doesn't work with one lender, I can send it to another lender. However, there are certain guidelines that we all have to meet. The second step, once you get the pre-approval, I'm going to send it to you and I'm going to send it to Jamie. You're going to tell Jamie your criteria. I want a backyard, 3 bedroom, two baths. I want a gazebo. I want a pergola. I want a big front yard. I want a pool, whatever you want. That is her job to make sure that she pull all of that together So you and whoever moves in the house with you are happy, you're comfortable, you like what you're doing. That's step number two. You find it, you tell her what you like it, you put an offer in, you say, hey, I want to buy this, I like this, but I don't want to offer 300, I want to offer 295. Or it may be a competitive market. You may say, let me offer a little bit more. That's Jamie's position. She knows the real estate better than I do. I just know how to get you the money. But you and her will sit down and talk about all of those steps and negotiation techniques. Once you sign the contract, you send it back to me. I submit it to the processor. The processor send it to underwriting. Now, this is where the second approval come in. The underwriter reviews everything that I've gathered, review the contract, and you will get something which is called a conditional approval. A conditional approval meaning everything looks good now and we can do the loan. However, there are few things that I need to finalize the loan. Once you satisfy those three things, or whatever, it may be 10 things or maybe two. Once you satisfy those conditions, you are what's called conditional approval. Now, once that is satisfied, I'm sorry, let me back up. It's a conditional approval. Then once you satisfy, we call that a full approval. You approve. It's called CTC, clear to close. That means everything has been validated, is good, is great. You're good to go. Now, doing that piece, we order an appraisal. An appraisal is going to make sure that the house is valued at what the contract is said, and it makes sure that you're not buying a dilapidated house. And make sure the electric is working and the water and the plumbing and just certain things. The windows have to have locks and certain things that they have to go by on their checklist to make sure that the home is efficient and ready for you to move in. Once all that is done, we go to clear to close. You got closing day. Go to closing day, you sign papers. Now they got two different kind of close, three closing. You have a hybrid closing, I mean you can do part of it on a computer, and then the other part you will a notary or you can go into the office and sign it. The other one is a full virtual closing, and that means everything is done on a computer. Or you can do a traditional way. You go to the closing attorney's office and you go in there and you close it, Jamie hands you your keys. That's the traditional way. Either way is fine. You talk that out with Jamie and the settlement company, and you're moving into your house. So we mentioned about appraisals, and I'm going to talk to you about inspections. The appraisal, again, talks about the market value. Then when it's talked about the market value, it gives a breakdown of every comparison in that neighborhood, so you know that that house compares to the other houses in your neighborhood. We have that MPR. This is the one that tells you that the house is safe, is sanitary, is sound. That's a report, a special report with inside the appraisal that they have to fill out. Decision impacts loan approval directly. The underwriter reviews the appraisal once it comes in. They look at it and make sure everything is correct. The price is not inflated. Something doesn't look right. They take pictures. If they see something in the picture that the appraiser didn't see, they may address that. Home inspections. It is not mandatory, but highly recommended. So let me give you an example. I went out to a home today, brand new home, just built. The guy got an inspection. He just built it. He had a contractor come in and build it. He's going to rent it out. And he has, I don't know how many pages, pages and pages and pages of a home that is brand new built that missed a couple of things that would not pass an appraisal, and the inspector caught it. So highly recommend that you get an inspection. Highly recommend that. That gives a deeper dive into everything. Gives you the conditions of the property, and it just lets you know where the property stands, just a little deeper than the appraisal. Now, I'm gonna share, let Jamie share her knowledge with you. I know I talked a lot, went a little fast, but I want to share some information with you of what's going on her side. And definitely listen, get involved, write it down, contact her. Jamie, the show is yours.
Okay. So first up, we're going to talk about how a loan officer supports a strong VA offer. First is strong pre-approval and buyer preparation. Before submitting an offer on a home, the loan officer, Reggie, is a crucial partner in making sure that you are fully prepared. Income, assets, credit, and VA eligibility are reviewed so that we can submit an offer with confidence. All of that rolls us into understanding the buyer's purchasing power. The loan officer helps me to guide clients realistically by explaining the budget, estimated monthly payments, and any VA specific benefits. This allows us to target homes that align with the financial goals. Next is quick communication and strategy. Reggie and I stay in close contact throughout the transaction. We discuss closing timelines, changes in the contract, and any financial questions. Having a responsive loan officer allows me to better serve you as my client and keep the transaction moving smoothly. Last is preparing for a smooth closing. Once an offer is accepted, the loan officer continues to be a key partner by keeping us informed on the loan process, meeting deadlines, and proactively addressing any issues that may arise. Next slide. Okay, so how to make a VA offer competitive? As we talked about before, you start with a strong pre-approval. A competitive offer begins before we ever write a contract. Having a thoroughly reviewed pre-approval from a trusted loan officer gives the seller confidence that you, as the buyer, are financially ready to move forward. The loan officer is a valuable member of the team because they verify the buyer's qualifications and answer any concerns about the VA financing process. Next, we have present the VA loan as a strength. VA financing is one of the strongest loan products available because it is backed by the Department of Veteran Affairs and is designed to help those who serve the country achieve home ownership. Next, strong agent to agent communication. I make it a priority to have a conversation with the listing agent to understand the most important things to the seller. Sometimes it's not always the highest price. It may be the closing timeline, flexibility, or the certainty of closing. Lastly, write a clean, thoughtful offer. According to your goals and comfort level, we look for ways to make the offer more attractive by minimizing unnecessary complications, aligning with the seller's timeline, and ultimately presenting a complete and well organized document. To sum up the last couple of slides, my goal as an agent is to advocate for you as my client, and having a trusted loan officer such as Reggie allows us to present a well-prepared competitive offer. The partnership between us makes all the difference in getting the active duty military and veteran buyers to the closing table. So I have one more slide for you all, and this is Loanopoly. This is just a fun way to navigate the home buying process, starting with go at the beginning of the process in red, and then moving to green, where you receive the approval and search for your home. This is where the fun begins. And for example, you'll be able to tell me you want an updated kitchen or a spacious primary suite. We'll talk about all the things that you want and check off the boxes. Then ultimately, you get all the way around to the goal, which is closing. And in the middle there are some things that you shouldn't do because it could delay anything that's going on in the process. So you want to make sure you don't do those things. Just remember, a strong transaction is built on preparation, partnership, and communication. Thank you all, and back to you, Reggie.
All right, thank you. A couple of things I want to share with you all. If y'all look at what she had on that Loanopoly, if you want a copy of this, reach out to her directly. But these in the middle, don't buy a car, don't change jobs, don't spend money outside of clothes. Just those are some rules in the industry that you really don't want to do because, as Jamie said, it can delay the process. I told y'all she was thorough. She gave y'all something to really look at and talk about because those are the things that can hold up a loan process. So we're coming to the end now, and Jamie did mention the process of the lender agent buyer. I cannot stress this more. There are a lot of agents out there and there are a lot of lenders out there, and we all can do the same thing. Some are better than others, some are horrific. The main portion of this is you want to be able to have a relationship with the person that's taking you out to look at a home, buy a home, or purchase a home, Jamie. You want to be able to have a relationship with your mortgage person because you're getting a $300,000, $400,000, $200,000, $500,000 loan. A lot of you are going to be nervous, like, oh my God, how am I going to pay that? So the relationship with your mortgage broker or loan officer has to be paramount, has to be paramount to anything else because you're going to have a million questions. You have about 15 people working for you when you're buying a house. You got the realtor, you got the appraiser, you got the loan officer assistant, processor, underwriter, account executive, title company, attorneys. It's a lot of people go. And the loan officer in the middle, they're supposed to maneuver and make sure that everything comes together. That's why the relationship is so important to come with that. We really thank you for coming out and joining us with this. I say, do you have any questions? We kind of went over a little bit. I know it says 6:30 to 7:30, but we don't want to keep you long. We want you to reach out to us directly because that's who we are. We don't bite. And sometime you may send an email and you may need to follow up and follow up. Sometime a phone call will help or email will help or a text message. This is our personal numbers. Do not hesitate to reach out to us. I look forward to speaking with you. We'll have a couple of more seminars, but if you are ready, aren't ready, let me say that again. If you are ready, if you aren't ready, two different statements. Please start the process now by writing what you want and put a date at the end when you want to move and then contact one of us. Hey, I look forward to speaking with you all. I really enjoyed everything. And if you have any additional questions, do not hesitate to reach out to us. Have a good one. Bye-bye.